Good morning, everybody. We've got a higher trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. December corn futures up 8 cents at 5.24 and 3/4. November soybeans up 9 and 3/4 cents at 12.16. December Chicago wheat up 10.5 cents at 7.35 and a quarter. December Kansas City wheat is up 13 at 7.44. December spring wheat up 8 at 9.68. If you guys are listening on the podcast, appreciate it. Leave me a rating or a review. If you're watching on YouTube, make sure you hit that subscribe button. Make sure you like these videos. We hit 3,000 subscribers earlier this week. The big picture goal is to get to 5,000. So if you are watching these videos, if you like this content, if you want me to keep doing this, help me to keep doing this by growing this channel. Let's get to 5,000. Hit that subscribe button and like these videos. If you need some additional assistance from me, guys, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. I send my subscribers a ton of information for $49.99 a month. You get my morning email. It goes out every business day right before I start these live streams at about 6:20. I have a text message service that accompanies that. My subscriber-only videos are sent out every single business day. A new video discussing grain marketing, grain markets, some sort of aspect to those two things. I really get into detail here in much, much greater detail than I can do in these YouTube videos. So certainly check this deal out this weekend, guys. We had our weekly ethanol report from EIA yesterday, and we saw a big improvement in weekly ethanol production. We are really moving in the right direction here. 1.032 million barrels per day. That was the best print since July. That was up 5.5% on the week, up 10% versus the same week last year, and up about 6% versus the same week in 2019. Ethanol stocks declined. They are running near their lowest level seasonally in several years, and ethanol producer margins have improved drastically. Some of the calculations that I've seen suggest that the ethanol producer here in this country are looking at their best margins in like 7 or 8 years. And what's happened here is cash corn's got drastically cheaper. Not only has the board fallen off a little bit, but basis has fallen off drastically in some areas of the country. Here's your ethanol chart on my screen if you're watching. 1.032 was the print from yesterday, and we've seen some crazy stuff here over the last couple of years in regard to ethanol production. Back in just February this year, we had that massive spike in the natural gas market, which resulted in a big collapse in ethanol production. Back in April of last year, we saw the big COVID panic, which resulted in a big collapse in ethanol production. But I think we're moving in the right direction here, certainly, and I would anticipate that we stay above 1 million barrels per day over the next several weeks. I think that you could see much, much better demand via the ethanol industry for corn, and that is a big positive. We certainly hope that that continues. USDA reported several flash sales on the export market this week. Yesterday, we saw a sale of 132,000 metric tons of U.S. beans to an unknown destination. That's almost 5 million bushels. Both China and an unknown destination bought beans on Wednesday. Corn sales were reported on both Tuesday and Wednesday. We need to see more sales of soybeans in particular, and I've discussed at length the woes of the soybean export program. The book of sales is down 37% versus the same period last year following last week's report, and I'll have an update for you on that after today's report. We will have an export sales report this morning at 7:30 a.m. Central. Corn sales expected 700 to 1.6 million. Soybean sales expected 600 to 1.4 million. Wheat sales expected 250 to 500,000. We've got our crush report from NOPA this morning at 11 a.m. Central Time. Traders expect a number near 155 million bushels. That would be a 3-month low in crush if confirmed. As I talked about yesterday, September is typically not a great month for soybean crush. You don't have new crop beans available in a lot of areas of the country yet, so you're going to see a weaker crush number tomorrow. But after that, I believe you'll see things improve a little bit, especially because the pace of soybean shipments and export sales is not very good. So maybe expect some more demand to go to the domestic processor. U.S. jobless claims fell to a 19-month low last week, so we're back to like the lowest level of I guess what you would call the post-COVID era. I think I showed you guys this chart last week or 2 weeks ago. It's an absolutely crazy chart when you consider COVID. 293,000 was the jobless claims number. It was over 6 million in April of last year, which is like an off-the-charts record number. You compare that to the financial crisis. I mean, we never got higher than 1 million. So this whole deal, we're going back in the right direction here, certainly in regard to the labor market. One thing of note, and why this is important, I mean, it's good that we're getting back to work, but another thing that's of note is that the Fed is watching the labor situation very, very closely, and they will base a lot of their decisions regarding interest rates, tapering, all that sort of stuff on the labor market, inflation data, and all that sort of stuff. As it stands this very moment, I think that the market and traders expect the Fed to begin tapering asset purchases as early as next month. They're talking November of this year, like mid-November. For the start to a tapering deal. And the Fed, of course, has been buying treasuries, mortgage-backed securities every single month to the tune of $120 billion. They're going to ratchet back those purchases. The Fed has told us that tapering and interest rate hikes are two totally separate things and that they will not happen simultaneously. The way that the market is set up right now, money markets suggest that we will see our first increase in the Fed funds rate sometime in late 2022, and that's kind of the estimate right now. You know, fourth quarter of 2022 is probably when you see your first rate hike. So that's what the market thinks here this very moment, although that could change depending on the labor market, depending on COVID, depending on inflation data, all that sort of stuff. The cattle market finished higher yesterday. We had a nice day, up almost $1 in that nearby October, up more than $1 in some of the deferreds. Feeder cattle were higher as well. Cash trade for the week, 124 in the north, 122 to 124 in the south, most of it toward that upper end of that range. The box beef market was up yesterday. In the outside markets, we've got the U.S. dollar just marginally lower. The stock market is up. We're up 19 points in the S&P, up 176 points in the Dow. Bonds a little bit lower. Precious metals are lower. Crude oil is up 72 cents at 82.03. These gas prices are really getting crazy. I think in my neighborhood, we jumped 20 cents just in the last 3 or 4 days. Have a great weekend, everybody. I'll talk to you guys on Monday.